Hi everyone. Good morning, good afternoon, good evening. My name is Ritesh Jain, and thanks Grace for having me over here, and thanks to Payments Canada. So my name is Ritesh Jain. I co-founded Infynit, which is basically focusing on the fintech and a major problem in the UK and European market. I come from the payments and banking background. I won't take much time over here, but let's get into what's really happening into the payments landscape as well as what are the key trends as of now. So the first and foremost are that we all know and we have seen quite significantly, especially during this pandemic and even before pandemic, is the contactless payments. So I have been around the blocks in the payments landscape. I introduced Apple Pay to the UK and European market. I was leading the future of payments for Visa. So I know that we can talk for quite a lot over here. But it's a great momentum that we have seen, especially in last couple of years. And the numbers says it all. So as we know, the numbers over here, uh, it's a in 2020 we have seen people are looking for a safer ways for the payments, especially cards, both swipe and contactless. They are getting their shares, and we have seen a significant drop into the cash payments for obvious reasons due to the pandemic. And what we have seen from the various reports as well as from the market experience, that the SMBs or the SME businesses are more focused around the contactless and and the card payments. They are reducing the cash, as well as there's another trend that we have seen significantly is around the QR codes. But that adoption of the QR code varies as per the geographies. And these contactless payments are basically reducing the fraud because of the embedded security as well. And the contactless or the mobile acceptance across, we have seen a huge growth in this market. Not only the contactless and the payments, we are looking into the various other payment methods as well, which we are going to just look into in a bit, likes of buy now, pay later, or the installments. And the contactless payments are here to stay. As you can see from the numbers, very obviously, the 65% people says even after the vaccination or once they go back to the normal, they don't want to get back to any other payment methods. And even more than two-thirds of the business or three-fourths of the business, they would still prefer contactless payments. So yes, we have seen a great movement in last decade, but what we have seen in last 15 months, we are sure the people are not going to go back to the old traditional methods of payments. So this is going to stay over here. Another thing, what we have seen in the last couple of years, embedded finance. This specific word has picked up quite a lot of momentum in last few years, and especially in last 18 months. Buy now, pay later, Klarna, Afterpay, and whatnot. But it is not only limited to the payments. It is not only limited to your e-commerce or the shopping. The embedded finance is across the board. And when I say across the board, it's related to your insurance, it's related to your any avenues where you can make payments. So payments is all about removing friction from the customer journey. And what happened over here is a very interesting part. The banks have been pretty much focused on to origination. They have built up the journeys, and then the fintechs came. And fintechs has taken the benefit of the origination which is created by the banks, as well as of the payment ecosystem. Now the payment has gone up significantly in last decade, and the value stream has changed as well as multiple payment methods. Now people are focused around the frictionless payment, and that's what your embedded finance offers. And the number says it all. Today we are looking at 30 global banks and insurers. Their total valuation is around 3.6 trillion of the business that they do. And when we're looking into the future, by 2030, embedded insurance, lending, and the payments, that is going to grow double from here. And that's a significant growth. And that is the overall new addressable market that we are looking at. And we've already seen this on to whether it's through the SPACs or the stock markets or the use of Klarna or Afterpay or any other embedded payments. I've got a different view on the buy now, pay later. We can talk about it during the conversation later on because I'm more conscious about the regulatory and compliances around the buy now, pay later because I'm more focused around the fair value, fair product, but at the same time, whether we are conscious in providing the right products and the means for consumers to pay, or whether we are pushing them into the debt cycle. But that's a separate conversation. The other very much interesting, again, we got into here in the buy now, pay later. So embedded finance is the overall grand schema. Buy now, pay later is just the one part. And what we have seen in last couple of years, especially 2019 to 2020, has seen a tremendous growth in this landscape. And the growth is close to 93% CAGR. That's quite a lot, especially if I compare that just from 2019 to 2021 until now, it has seen a lot larger than a 93%. So this market is going to stay, grow, but what is going to change over here is the regulatory and the compliances that we have already seen started coming up from the European market or the various other markets as well. So yes, the buy now pay later has to face the heat of the regulatory and compliances because you can offer a frictionless experience to the consumers, but are you really doing a due diligence? Whether the customer affordability or you are just pushing them into a debt cycle. The biggest pain or anxiety or the stress for the people is the debt in the developed economy. And the interest rates are not lower, they are significantly higher. Yes, the buy now pay later works in favor for the merchants, works in favor for the organizations, works in favor for the payment companies. But is it really working for the people? Not really. The challenge is around the financial literacy. And unfortunately, the financial literacy globally is at the lowest levels. So that's where the challenge with the buy now pay later. Yes, it is gaining the momentum. There's a long way to go and significant growth, but it has got its own caveats as well. Now, the another trend that we are seeing is the omni-channel experience. I know everybody will say, yes, we are hearing this for the decades. Yes, you're absolutely right, because the digital transformation or transformation is not a project, it's a quest. And that is for the continuous transformation. And that's why we are saying the omni-channel experience. This is going to stay over here. We are already seeing that the modes of the payment through the various channels and embedded into the customer life cycle. Online sales, we have seen that it is growing year on year and is further going to grow significantly or exponentially from here onwards because of obvious reasons, because of the pandemic. People couldn't go out of the house, they couldn't shop in the shops, and now they got used to. Generally, you need just 21 days to change your habits. And we have been in this environment for over 15 months. So whether they are going to go out, shop, yeah, probably for a change. But whether they will go and get back to their old habits, probably not. So long way to go for this. Again, I'll come back to the QR codes, which is one of my favorite method of payments as well. For obvious reasons, the ease and the cost. They both are cheap. The ease, it removes the friction significantly. And the best part, what I've seen in the QR codes payment, if you go into Asia or anywhere in the market, in Asian markets especially, QR payments are very, very common. Whether you go into the Asian countries like China, Singapore, or Malaysia, or India specifically, you can see the hawkers sitting on the side of the street. They are selling a fraction of a pound, a fraction of a dollar stuff that you can buy and make payments using digital channels by using QR codes. And that's what we would like to see globally. There are different challenges to the QR codes. I'll come back to that later again. That what are the challenges around and why we are not seeing this the similar level of adoption globally. Now, when we talk about all these payment methods, now we have seen the trends. We are looking into the various trends globally, and we always hear that there is no dull moment in the payments landscape, and that's why probably most of you and most of us we love payments landscape because there's always something going on. But what is really happening? We have changed, and I generally call it digital lipstick. We have put in the digital lipstick for most of the time in last decade. But where we haven't really worked is around the infrastructure part, and that's where the main focus is. You can improve the customer experience, you can put in a new channel, but if your infrastructure is not able to support, that's where the challenge is. And that's where we are looking into the new technology. That's where we are looking into the modernization. I've been fortunate enough to involved into the various payment initiative globally, whether it's UPI in India or whether it's the current ongoing initiative for P27 in Nordics or some of the other initiatives from SWIFT or initiatives in MENA region. So I consider myself as fortunate because in payments, there's something new coming up on a regular basis. But the challenge that we still face in the payment landscape is around our monolithic platforms and the services. Unfortunately, we still live on the bandages and tapes. We still lives on the connectors, and that's where the challenge is. And that's why everybody is looking for the future of payments. We used to talk about the future of payments 10 years back. At that point of time, we were looking into the contactless payments, embedded finance. We are here now. We are moving into the future again. But what about the infrastructure? Yes, there was a significant movement in the infrastructure side as well because of the technology landscape, which has changed over the period of time. Because of ISO 2020, oh, that's what we are seeing, 2022, which is going to build a significant level of interoperability across the platform and services globally. Swift has tested the various payment methodologies recently, and we are going to see that adoption globally as well. And on the top of that, cryptos and the stable coins and the CBDCs. So whatnot. There's a lot in the store. So yes, we are looking into the payment transformation, especially the infrastructure transformation, and now the focus on the banking and financial services as well. They have come out of that mindset of the payments in-house. Now we are moving towards the payment as a service, and the value streams in the payments has changed over the period of time as well. So it's not only earlier, yes, the four party, three party systems, but there are multiple parties involved now. There are multiple businesses which has come out of the payment ecosystem. So technology continuously going to play a significant role. The other thing which is we are going to talk in detail as well today, it's around the financial inclusion. I'm a member of G20 GPFI, which is the global program for financial inclusion. And here today we are going to talk about the financial inclusion. And we'll clear up some of the views from the financial inclusion in terms of what it is for the developed and developing economies. But the challenge is often when it comes down to the financial inclusion, it is considered that it's a problem of Eastern markets or the low income markets or African markets. But let me tell you, it is not only a challenge for emerging markets, it is a challenge for global economies, even for the developed countries. Because there are, when we consider the financial inclusion, we look into the two societies, served and unserved. But the biggest society we really talk about, and that is underserved. And that's everybody is focusing basically the fintechs and the payment companies or the financial services. So yes, to get to the financial inclusion, we need a infrastructure, right level of infrastructure, partnership ecosystem from the fintechs, financial services, and the government. Nobody can solve this problem by themselves. And the fundamental behind the financial inclusion, especially for the unserved society, it's the transaction accounts. And you can't have a transaction account without an ID. I can tell you some of the very interesting stories around the financial inclusion, especially in the developed countries where some of the banks, especially where I was recently as the COO, HSBC started an initiative in one of the market to open an account for people without address, without identity. Yes, the banks can start that. They can do this as a use case, but the question comes down to the scalability of the use cases as well. So the biggest challenge in the financial inclusion is around the identity. So let's talk about that into the due course as well. So thank you, and I'm sure we have got a lot more in the store from Grace. So thank you again.
That's great. Ritesh, thank you so much for that overview of payments innovation. So as we move into the Q&A portion, I just want to remind those in the audience to feel free to use the chat panel to ask your questions throughout the session. So maybe Ritesh, we can start with just, I've looked at your bio. You've had quite the career in financial services and payments, and you referenced the latest venture, Infynit. So could you just maybe first share a bit about your latest company and what led you to create it?
Thanks, Grace. So as I said, I led the future of payments in the past. I led as a COO digital at HSBC recently, was focusing on building the bank of the future, and been working with quite a lot of financial services company. What I realized that there are quite a lot of problems which are existing. Some of them will be solved by the financial services, and some of them will not be solved by financial services for obvious reasons, because that could be hampering their business as well. But let me tell you what my focus on Infynit. At Infynit, our focus is on providing fair value to the consumers and the customers. And hang on, I know everybody talks about it. I know everybody says that they are going to provide the fair value. But given my background and the focus around from the G20 or the financial inclusion or into the underserved society, I was very clear when I started thinking around the problem, that how we are going to fix the problem in an innovative way. So providing fair value to the consumers, and through Infinite, we are addressing on end-to-end problem. We are not looking into the piecemeal for a consumer. So the UK market or the European market or globally, the credit card debt is the biggest challenge. And I know US market is one of the biggest example for the outstanding credit card debt. UK market has this year is around 60 billion outstanding credit card debt. And in the developed countries, the biggest challenge is around the disparity in the interest rates or the disparity in the products. From your personal loan to credit card to the payday loans. And sometimes when I talk about this, the payday loans, yes, it is for the subprime customer, but at the same time, the interest rate on the payday loans, 1000%. Oh, that's an overkill. You're pushing people into a debt cycle.
Mm-hmm.
And the other companies are not doing anything better. If you're charging 30-40% APR, that's no good. So that's where we started focusing on how we can solve this problem to the consumers and how we can take out the pain and anxiety from their life, as well as how we can make their current financial product working for them rather than overloading them with another account, another card, how we can make them use their own financial products in a better way. So that's what we are doing at Infinite.
Very inspiring, Ritesh. So maybe taking a step back, you referenced this a little bit in your initial thoughts, but Given the topic of our chat is on payments innovation and financial inclusion, could you first share what you think of as financial inclusion and what does that mean, both in a developed country context as well as a developing country context?
So, the financial inclusion, from my perspective, having access to the financial services is a fundamental right. And the challenge, there are multiple challenges around it, and we can talk about the various initiatives and the various challenges globally. Similarly, having an identity is a fundamental right. And the biggest challenge in financial inclusion is the identity, establishing an identity for a person. And it pains me quite a bit when I say this, then identity could be a differentiator in life or death for people. Yes, we are privileged. We have got access to identity. Though it's a different thing that we don't own our identity, that's a separate topic. But there's a huge number of people. If we have to put down the numbers, it's over around billion and a half or billion and quarter precisely, who do not have access to their identity, and hence they don't have access to the financial services. So the financial inclusion is about providing a basic access to the people, providing them their basic human rights so that they can live well, they can be part of the society, and they do not end up in paying poverty premium, which they do without having access to the financial services, or without, or in absence of establishing their identity. Because globally, in various economies, the various government have got the level of public policies to support underprivileged people. But unfortunately, if they do not have access to their identity, if they can't establish their identity or don't have access to the financial services, then they do not get benefited by these schemes, by these policies, and they get further exploited. So, in my view, the financial inclusion is a fundamental right to every human being globally. And unfortunately, it varies quite a lot in the geographies. We have seen that in emerging markets, it's a lot bigger problem than the other markets. But I can tell you, it is not just a problem for the emerging markets. I would reiterate, it's a existing and growing problem in the developed economies as well. In UK, where we are like 60 million population, over 60 million population, well developed economy, well functioned financial services, and best in class policies. Still, we have got around 1.3 million population or people who do not have access to the basic financial services. So, I would like to see an ideal world where everybody has access to the financial services.
Yeah, makes a lot of sense. So then I guess if you think about all of the payments innovations that you've seen happening around the world, which ones do you see as having had the greatest impact on financial access, financial inclusion, establishing identity, whether positive or negative? Which payments innovations have had the greatest impact?
I'll come down to the fundamentals of it, and that is the the biggest impact in the financial inclusion is through establishing an identity of people. The biggest program globally, or the identity program that we have seen, is the Aadhaar card, or the UID, unique identity in India. I've been fortunate enough to involve in that program from the initial stage, and it has brought a great level of financial inclusion into the society. So after establishing the identity, the government took a further initiative, and that is about the bank accounts, because once the identity is established, then you can have your bank account, so that you can get benefited, or especially the underprivileged people get benefited from the G2P policies, or from the government to public payments, or the various schemes. So first, establishing identity. If we talk about the technology or the payment method, then it comes down to the mobile payments and the wallets, and thankfully to the card processing companies, the cards, the preloaded cards. That is making a significant difference. So why I said about the payments, why I said especially the mobile payments or the mobile, because mobile is a means not only for the payments, but it is utilized to establish your identity as well. So it is working both ways. And we have seen a tremendous example in last decade and even before M-Pesa, right? So it has made a difference into the society, into the Kenyan society for that matter. Similarly, in different African countries, I'm seeing that. If I'm going to Brazil for that matter, there's a, people utilize the various payment methods, or government utilizes the payment methods through their schemes, and they are paying one third of the population using the mobile payments or the wallets or the cards. So the mobile is definitely one of the method which is making a huge difference into the inclusion, and it is utilized to establish the identity, and especially for the transfers as well. Because the challenge comes down why people do not have identity. The fundamental question: why do they do not have identity? Governments, economies, they are running a various programs and initiatives. People do not have trust. They have been away from the main public policy system. So they've lost their trust into the policies, they've lost their trust into the governments as well. And the second thing is there's a level of migration in the underprivileged people. So they are homeless, or they keep migrating from one reason to another reason. And that's why they do not have any permanent address, and that's why we can't establish their identity. But now we have seen the adoption of mobile payments globally, and what we have seen that is used as a means to establish identity of the people. So the wallets, payments, and the cards.
Great. Ritesh, we actually have a question from the audience that I want to make sure we get in here. The question is a challenge that is often present when creating financial inclusion for underserved populations in developed markets is that it can be difficult to reach these populations and difficult to create sustainable business models. So how do you approach this thinking, especially with your company, Infynit?
So at Infynit is mainly focused around the underserved people. So Infynit is focused around the people who are going through a difficult phase. It will, in a simple terms, it will let people manage their credit. It will let people pay to any avenues using their cards, as well as it will refinance your outstanding debt at a significantly lower APR than the markets. So the focus is around that how we can add value to people, how we can enable them to use the existing credit facilities that is available to them, and how we can reduce the cost of those credit facilities as well. Why I said what I said earlier, some of the markets are very concentrated markets, especially UK for that matter. 92% of the market or credit card market is owned by five players, four banks, one Amex owns the 92% of the market. So it gets quite difficult for them, and because The late payment fee, the interest rates, and the interest payments makes a significant revenue stream for the financial services. So it is important and critical for somebody to disrupt this market. You do not want, and that is where the challenge to the regulators has run. Because nobody would like to see a concentrated market. Sorry, it might sound controversial, but the fact is how we can provide a better financial services to the people, how we can make the cost dear to them, as well as the biggest challenge is how we can inculcate the good financial behavior into the people. So here we are talking about one side, we are painting the picture about the financial services. Let me tell you the other side. We have run a deep surveys and we have done a market research. 78% of the people in the developed economies have responded that they do not know when they make their minimum payments on the credit cards, they incur higher interest rates. And that is quite astonishing result. That is quite surprising. And the size of the survey is quite huge. It's not just 100 or a couple of hundred people. I'm talking about significant number of people. So the challenge is around the financial literacy. It's not only about the building the product and services, but how you can educate people to utilize the available services by them.
And Ritesh, how do you think about sustainable business models to do this? Or do
Sus-
you think that it is, it is the role of maybe a nonprofit type of model?
Definitely not. Yes, when I say definitely not, it doesn't mean that you can't have a sustainable business model while you're providing services to others. Right? There's a huge opportunity. Let me take you an example about when we talk about the financial inclusion itself. It's a massive business opportunity for the financial institutions. As of today, roughly 200 million SMEs, they are not in the financial system. That's a massive opportunity. Over 1.2 billion people are out of the financial systems. That's a massive opportunity. In terms of the model, it is a highly sustainable model because when you compare I told you about the disparity in the interest rates, right? On an average, the personal loan in the UK is around 8%, credit card between 24 to 36%. Payday loans, there's no bar, on an average 1,000%, right? To become a sustainable business and to provide a sustainable business model, you don't have to squeeze out from the people's pocket. There's a huge gap in the market. And it is, and let me reiterate and tell you the financial inclusion. Now, again, we are getting into fintech, financial inclusion, and the financial services. The financial inclusion is not a fintech or the financial services problem alone. It's a public policy challenge. And the fintechs and financial services can't fix the problem of financial inclusion by themselves. And when I'm saying this, I'm focusing more on to the unbanked society. But on the other hand, the fintechs and financial services, along with the regulators, can fix the problem for the underbanked people. And the underbanked are you, me, and everybody else. Why we have to shop around significantly for the financial product? Because there's a huge disparity. And I know there are different business model, and that's why there's a disparity. And it all depends on the credit worthiness. But hey, the credit worthiness of a person whom you are giving a loan could be 8% to 1200%. That's an overkill. That's no brainer. So definitely you can build a sustainable business model by picking up a problem and solving for the consumers.
Thank you. We have a question here about open banking, and I was curious about this as well. So can you share your thoughts on what the impact of open banking, in Europe, for example, has been on financial inclusion? And then a second part to that question is, for those jurisdictions that have not yet moved to open banking, what advice would you give regarding how to design an open banking system that actually increases financial inclusion?
That's a very interesting question and closer to my heart as well as my soul. And in terms of the open banking, I've been pretty much involved from the early stages or the inception into the UK and European market from the PSD2 perspective. So open banking is like either it's market driven or regulatory driven. It's more prescriptive in the UK and European market for obvious reasons because it is regulatory driven. So what open banking is doing, the focus for the open banking in the UK and European market started, or specifically in the UK market, started from the view of the market concentration. So the banking and financial services was considered as a red taped environment. It was difficult for people to start any new product, services, or business into this market. And having said that, doesn't mean that we have moved far from that landscape. It is still very significantly in which geographic or which region you are. You could start a fintech, um, you know, kind of regulated fintech in matter of 0 to 3 months, or it could take you 2 years, depends on the region you are. And the same business model, same products. Now, open banking, the focus is behind that how we can build an ecosystem and the partnership from the banks and the third party providers so that they can provide a competitive services to your consumers. So what it dictates is the banks have to share the data. Banks have to open up of, as my couple of my very few dear friends say, washing up the dirty laundry in the open space. And that's what it is. So banks are opening up their landscape so that third parties can utilize those platforms and services. And on the top of that, we have got a specific open banking platforms as well, which are facilitating this. Now, how open banking is going to impact or how it is impacting the level of innovation in this landscape we are seeing. And I wouldn't be shy in saying the majority of it because of the open banking. Unfortunately, some of the reasons are far ahead than the others in the open banking landscape because of the adoption by their regulatory authorities. If we go to Hong Kong or Singapore for that matter, monetary authority of Singapore is pretty much on the forefront. Similarly with the Hong Kong or in China, obviously, or India for that matter, they are coming up and growing. UK European market is much more mature. Canadian market is coming up into the limelight. They are uh, progressing well. It is slower than the what everybody would like to be, but there are challenges as well because when you are putting up a new regulatory, you got to take care of the well-being of the financial services, the customers, and the new businesses too. So that's why there was a lot more focus on the regulatory. US market is still in the early stages. So what one can learn is from, because we have seen this from last 5 years, we have seen the initial stage adoption of the open banking into the market. We know there are teething issues when it comes down to the regulatory, and that's what the other regulators globally can learn from the UK and European market. UK and European market is more mature. UK is more mature into the open banking platforms and services. By having said that, doesn't mean that they are commercially far ahead. No, it could have been done in a better way. There's always a better way. Now, how it is going to impact the financial inclusion? So it is going to more focused around the underserved society. So the third party providers can provide the competitive products and services to the people. They do not have to rely on to the leading financial services provider to offer them the services, and they will have the flexibility of using the payment methods, or they will have the flexibility of using the various account services from the third party providers. What it is doing ultimately, reducing the friction, reducing cost. Yes, there are challenges around the security, but those have been covered through the label of the regulatory changes like the SCA and by the multi-factor authentication, or the level of authentications across the platform and services. So that have been covered through the regulatory as well. Now the challenge comes down to the open banking. What's next? Earlier we have seen that banks were cautious about open banking because they would share the customer data and they might lose the customer. But that is not true. What is turning out to be, it is a partnership ecosystem. Banks have got their own challenges, fintechs have got their own set of challenges. Banks sit on significant amount of capital cash and the customer base. The fintechs have got a challenge with the cost of capital and the cost of customer acquisition, which is a common challenge. So they and the financial institutions have got a problem with their own monolithic platform services legacy. On the other hand, fintechs are born in cloud. So they have got they are nimble, agile, safe, and secure. So they can complement each other. And that's what we are seeing now. So the banks are working more in partnership with the fintechs, and fintechs are working in partnership with banks to provide a better financial services. So yes, it is building up that environment where it is supporting the underserved societies significantly, but at the same time, there's a huge adoption and the changes that we are seeing into the unbanked society as well. It is not only because of the open banking, but well beyond the open banking as well. Probably we can pick that up in a bit as well around what's really happening in the financial inclusion. So yes, open banking is playing a role in providing people the affordable products, services, and what open banking has done is, I would say, worked as a catalyst for large financial institutions to unleash their own potential and power. So they have nudged enough
That's great.
for traditional banks to work in a wide direction.
So I guess open banking is one big trend in the regulatory space. I want to touch on another big trend, at least in conversation, which is central bank digital currencies. Could you share your perspective on its impact on financial inclusion and any positives or negatives that you see with how central bank digital currencies are being developed?
Sure. When we talk about the CBDCs, or the central bank digital currencies, or when we talk about the digital currencies or the digital assets, right, the first thing comes into the mind, it's a human nature, right? We tend to relate things. The people who are into the financial world, they understand the difference pretty well. But for other people, it's when we talk about the digital currency, and they could correlate it directly with the cryptos, directly with the stable coins, or the variety of digital assets. Right. I hate to say this, and hate is a strong word, but payments is a political business. When it comes down to the payments, it is regulated significantly, and it is dealt by the central banks. They have got the hold. The monetary authorities of the various regulatories, they control it, which is good enough. What happened in the last decade? The adoption of the cryptos or the payments that we have seen the various use cases from Ripple to Ripple is an actual use case in for the wholesale payments or the payments by the cryptos. Apart from that, we have seen other use cases as well in the wholesale banking and the wholesale payments. But what has started happening in last few years that there was a huge growth into the cryptos market. It is well over 2 trillion at this point of time, which is great. That's fine because it's an alternate investment, alternate asset for the people. The challenge comes down to when the monetary authority started losing control on the payments or the currency. So it is clear that people are moving towards the digital payments. The adoption is great. That's what we have seen in last decade. The adoption of the digital assets as well. Now banks are focusing around that we are already facing the challenge with infrastructure at this point of time and how we can take a leap so that we can get rid of the infrastructure challenges as well as we can offer the services to the people that they could adopt. And that's where the CBDCs are coming into the play. Now the challenge comes down to with the CBDCs, what's the role of the banks going to be? Because the central bank digital currency is owned and circulated by the central bank. Then the question comes down that I, as a Ritesh Jain, whether I need to have an account with the central bank, because if they manage my money, if they can provide me the money and if they can provide me the financial products as well, then why would I need a bank? What is the role of the bank going to be? So the other question is like, what is the distribution method of the CBDCs going to be? Now, because we can't throw away the universal banking model completely, right? And that is a huge model, and we have seen that for decades or for the centuries. And the adoption and the growth in the universal banking model, which is changing as well. Now, the CBDCs are going to play an immense role into the payment ecosystem. Actual use cases, we are seeing that already in the East. Some of the markets which are very close to my heart, again, because of the financial inclusion as well as the kind of services that they are planning to offer in the Caribbean market for that matter. Recently, they have introduced the digital currency in the Caribbean markets and the Caribbean islands. And the focus on that is not only for as a as a method of restoration, it's basically for the circulation. It's basically for not to just store the value, but basically to utilize the value and how it can help people, every individual, even without a bank account, how they can use that digital currency. That is what it differentiates. So the role of the CBDCs, it is going to remove the friction, increment of the adoption because of when it comes down to the payments or the money, the first thing comes into the mind is around the trust. And who do you trust more? Whether you trust some coins which are available onto these cryptocurrencies exchanges, or do you believe and trust into the central banks who manages or monitor the financial ecosystem, and obviously the later. So we are going to see a level of adoption, growth, removal of the friction in the payments because that is where the biggest challenge is. So I'm significantly hopeful with the cryptocurrencies. When I say the cryptocurrencies again, let's clarify, not just the cryptos, I'm more focused on the CBDCs. And there are few use cases that we have seen firsthand until now. And there are significant level of cases which are under development. I was having this recent conversation with the BIS and other institutions as well. And at least If I have to put down the numbers, that is going to be high numbers as well. But in the next 6 years, at least 40% of the central banks are talking about introducing their own digital currencies. So that's where the adoption going to look like.
Thank you. We've covered a lot of payment innovations in this chat and also in your initial presentation. I guess I wanted to know what additional innovations do you think are needed to really improve or make progress on financial inclusion?
The
What
focus
have
is,
we not solved, I guess, is my question.
sorry.
What have we not solved? So what additional innovations are needed?
It's quite painful to answer this as well. The reason is what we have seen in the industry, that we have gone from length to length in terms of the technology, in terms of the innovation. Here we are talking about the central bank digital currencies. On the other hand, we are looking into the best in class payment methods. The cross border payments have transformed. Uh, you can make the payments in seconds to minutes from one part of the world to the other part of the world, and that's where we are today, right? From the digital identities, there are national programs. That's what we are seeing. But on the top of all this, what is really painful is even after having all these technologies, even after having all these methods and the fintechs and the financial services, which are growing leaps and bounds year on year, right, in terms of the numbers, we still live in a society where we have got a huge population who do not have access to the basic services. Why is it so? At one hand, we are talking about internet for everybody, sending up thousands. We are doing quite a lot into the technology transformation. We are doing quite a lot into the financial ecosystem. But what I would really like to see, the level of financial, at least the basic level of financial services for everybody. And what we haven't done enough is mainly around the identity. And that is a regional decision, the regional challenge in terms of what they would really like to adopt. We have got the self-sovereign identity. We have seen the utilization of the biometrics, but the adoption of it, that is what required. So yes, in terms of the what we have seen so far and what we haven't seen, we have seen at the surface level, we are growing quite significantly. We got to think about deepness of it, how deep we need to go as a society. At one hand, we are talking about providing fair value to the consumers. On the other hand, we are talking about people are being exploited. I'm completely in favor of the various policies and the services by the government. But we got to be really careful about when we build these policies and the services, because what happened with microfinance for that matter, just for an example, we have built up the microfinance to help underprivileged society. But the microfinance becomes a mean for the mediators or the agents or for the powerful people or the segment of the society to exploit underprivileged people. So we got to be really careful about when we are building up these products and services. So what, and the similar thing comes around to the M-Pesa as well, right? M-Pesa was great product. Everybody talks about it, sing and dance about it. And I love the product. I love the services, been involved with that for a long time. But the challenge that I've seen with M-Pesa as well, that it became a means for people to exploit the underprivileged people who do not have access. So what I would really like to see in the future is around how we as a society, as a financial institution, fintechs, public policy, governments, what efforts that we are going to take or what steps we are going to take to at least take these basic services to the people and bring them into the mainstream.
Well, Ritesh, I think that's a very inspiring note to end on. Thank you so much for this really thought-provoking session.
Thank you, Grace.
We're going to wrap up now and head over to Brain Date. So for those of you still with us, we look forward to seeing you there. Thanks again for joining us.
Thank you.